Oh man, so a huge day for Fantom, making two critical updates, but the price is not following suit. Fantom down 13.5%, Bitcoin down 5.5% at the time of recording. We got Bitcoin now sitting at 29,600, getting rejected from the 31,000 mark. We got Fantom sitting at 34 cents. What is going on in the markets? What are the key levels? Where are we heading to next? Is there going to be further downside, or can we get ready to head to the upside? And what are these critical announcements, and what do they mean for the price going forward of Fantom? We're going to go through that and a whole lot more. If you'd like my perspective, consider joining ijaz.uk/member to join our course member live streams where we go through technical analysis, fundamental analysis, and a lot more. Now let's get straight into the charts, because as you can see here on Bitcoin, we were going ahead to create our higher high. Remember, we needed to get above this 31,000 high from this point. We got our higher low, which is fantastic, and we wanted to post our higher high, and technically we got it. We just went past our purple line here before then getting rejected and sent to the downside. Now the next important thing is maintain another higher low. If we can maintain another higher low, remember this low is sitting at about 28,700. As long as we can turn around before then and go post another higher high above about 31,200, 31,300, we could start we can be in the process of creating an uptrend which can get us out of this mess. Okay, remember we got the weekly close in our favor yesterday, which was really promising. If I just show you this weekly chart, we did get this weekly candle, which was this previous one. The body closed well above the 29,000 mark, which is a good sign. Now, obviously, today has been another red day, which has opened up this red candle, which is not good. But it means that we have a bit of hope here that we can reverse this pattern to the upside. Now, the worrying thing, which is, even the worrying sign is on the one side, we've got Bitcoin, which is showing that we're coming towards a bottom, right? We can see the on-chain metrics. If you've not watched my video from a couple of days ago, go watch that. We go through a bunch of on-chain metrics explaining why Bitcoin could be creating a bottom around this 25, 24 level. But at the same time, we can see equity markets still upset. They're still upset. They're still trying to get used to this new interest rate environment. And it's now on a 6-week slide. So we've got the Dow Jones slightly positive day, 0.5, 0.1, call it flat on the S&P, and slightly down on the growth stocks, 0.5 down on the Nasdaq. And that is what is leading Bitcoin to fall today here, down 5%. Now we've also got Fantom down about 14%. So if I go into the hourly chart on Fantom, you can see a similar story which unfolded. Now you'll be able to notice, the astute of you amongst us will notice that here we were unable to go and create the higher high. Bitcoin created the higher high, but Fantom was unable to. You can see we rotated here at about 40 cents instead of running through our 43. Now the rationale for that is this pump up on Fantom was far bigger than the one Bitcoin experienced at the time. So this really did create a high there at 43, which is probably part of the reason we were unable to touch that. So now what's important for Fantom is we just need to hold and rotate, same as Bitcoin, before this pivot point here. So this pivot point sitting at about 30 cents, 29, 30 cents. We just need to make sure we rotate before then and go and post a higher high above this one here, which was sitting at about 40 cents. So if we can turn around and head higher above 40 cents, that would be looking good here on the hourly chart for Fantom. Now we've got a few catalysts which may help us, right? So the first one was this. Any Terra Luna projects out there looking for a new chain, please PM us. Fantom's uptime is 100% fast, low cost, and reliable. And we're seeing a lot of good layer 1 and layer 2 solutions now starting to reach out to the great dApp developers. If there's one thing we know about the Terra Luna ecosystem, there were some really good builders on that ecosystem, and it makes complete sense that other layer 1 solutions are now looking to come and bring them, grants, assistance, help with integrations and connections to bring their projects across to Fantom. Now this is really good. So this is really good for Fantom, for other people to really come across and start feeling what it feels like to build on Fantom. So hopefully they can get some traction with there. And naturally, if you can build a few great projects, bring across a few great projects from a popular ecosystem like Terra Luna, that is always going to be beneficial for the platform. Now, the other announcement, which is a big announcement, but could be having a little bit of unintended consequences, let's call it, is the announcement around FUSD. So for any of you guys who know, FUSD is a stable coin on Fantom, and they've had a few challenges in launching this stable coin from the very beginning. Now, Fantom are well on their way to subcontracting this, let's call it, across to Eulogy DAO, because they believe that stablecoin should not be created by the foundation, but instead by projects which have separate teams and survival of the fittest, right? So you can have many stablecoins on Fantom and they can all compete with each other, and the strongest will survive. Now, there's been an update, and the update is they're now finalizing the the FUSD liquidations code base, because previously there were no liquidations. Now, there's not much more information we can share really around that. I'm going to play you a clip from Michael Kong, the CEO, on his thoughts around stablecoin. And also, one thing to remember whilst you're listening to that is FUSD is an over-collateralized stablecoin. Very, very important. So to give you an idea very quickly, and I might go into a deeper video. Comment below if you want to see a deeper video around this, around the different types of stablecoins and what the difference is between each of these. But in essence, if you imagine USDC and USDT, which is Tether, so Circle and Tether, those are collateralized stablecoins. They're centralized and they can tell you the collateral is backed. Okay, this is where our collateral is backed in cash or cash equivalents or bonds. What do we hold? You then have something called over-collateralized. That's the same as Fantom, which is DAI and Magic Internet Money, these kind of projects, where they hold more collateral than the amount they're loaning out in the stable coins. You then have something which is full algorithmically backed, which was something like Luna before they started building their Bitcoin reserves, and same as USN. Okay, so those are the different kind of ones you have, and then you then have partially backed, right? Partially algo, which is a hybrid of the two. Something like Frax does that way. They've got some backing and some algo, and in essence, Luna was heading that way as well, because Luna had some backing in their BTC reserves, but they were technically an algorithmically backed stablecoin. So that's where we sit on Fantom. Now let's play this short clip from Michael Kong, who weighs in on the whole stablecoin issue. This was filmed just after the Luna troubles we had. Sphere around it.
We do generally think that, like, you know, the over-collateralized stablecoin models kind of work better. Kind of like the reasons that I've given before, because it's backed by an asset and there's a buffer there, so you don't have the collateralization ratio of 100%. You maybe have it 150% or 200%. You know, that adds a lot more security to the token. You know, to the debt-based token. And so what we have seen on chain are some of these like native like stable coins are coming to Fantom, which are like backed by collateral, right? At least to some degree. And so with this like FUSD token that the foundation put out, that honestly we haven't done a very good job at and hasn't been very successful. You know, we're looking at getting the auctions and liquidations fixed. So you know, the collateral would be initially backed by FTM, and then handing that FUSD token to the community for the community run. Because an important philosophy for the foundation, and one of the mistakes that we learned in 2021, is that, you know, we shouldn't be in the business of building applications that we think are lacking in the Fantom ecosystem. We should be encouraging builders to build those applications, but their core technology, middleware, infrastructure, that should be the technology focus of the foundation, and that's only what the foundation should be focused on for a technology level. But we do want to repair FUSD and hand that to the community. So we definitely don't want to go. You know, multiple people were PMing me and messaging me also publicly as well about, you know, doing what a coin like what Terra did, because there's a lot of hype around it, like, you know, USN with NEAR or USDD with Tron. And I told those people, I don't think that's the safest option. I don't think that's the best option. I think the better option is to have like an over-collateralized model tied to the value of FTM. And so that's the kind of approach that I think we should be going in terms of like launching stablecoins on Fantom. And I hope like other people also launch stablecoins that are kind of like that on Fantom.
And that's really important, guys. So just to kind of recap, the FUSD fundamentally is going to be over collateralized. So there's going to be more collateral than there is minted. This was not the case for Terra Luna. Very important differential with the number of USD. The backing was 3.5 billion to however many billion were in the market, over 10 billion, right, in the market. So that was the mistake that Terra Luna made. Terra Luna was initially an algorithmically backed stablecoin. You didn't need to be collateralized. Then they went to this proxy pseudo collateralized stablecoin where they started now saying, oh, we're going to have a backing, but it was super under collateralized at the point. When they flipped that switch, they became very under collateralized. They kind of didn't know what they were trying to be. FUSD at least knows that it wants to be over collateralized, okay? Over collateralized based on FTM. So you stake your FTM, you get your SFTM, that will allow you to mint FUSD. Let's carry on here. And then that was the other point, which is important, is he doesn't want to run this. The foundation do not want to run this. This should be separate projects running these stablecoins so they can be survival of the fittest. And that way, if one stablecoin fails or struggles or has difficulties because it's a difficult project, it doesn't bring down the whole network like the whole UST Luna situation. And then from there, it'll be survival of the fittest, won't it? If you're encouraging all these dApp developers to go and do their own best thing, then the ones which become battle tested and prove themselves worthy ultimately rise to the top.
Yeah, that's right. Because like, if you don't have a auctions and liquidation model that works correctly, or you have a bug with the smart contract, eventually like the stablecoin will be like in a lot of trouble, right? I mean, we kind of saw with MakerDAO back in March 2020, I think. The auctions and liquidation model didn't really work that well back then, because of like a lot of network congestion with the updating of the price of Ethereum, and so the protocol actually went into a lot of debt. I mean, they managed to claw themselves out of that. And since then they've improved upon the auctions and liquidations model, that even during like significant downturns like we've had more recently, or in May 2021, almost a year ago actually, or maybe a year ago to this day, when the price of crypto has dropped off very quickly, I think ETH maybe like 40% that single day, you're still able to like maintain peg, right? And so in the end, the number of stablecoin that's issued in a debt-based model is really dependent on how many people put up collateral, right? And how many people put up collateral is up to the market, right? They kind of decide what stablecoin they think is most sound, will get the most traction, has the most use case, has the most utility, and those are the type of stablecoins that they will be going to. And so again, as you mentioned before, like it's just competition, right? It's just letting the market play out itself, and some models will be better than others, and you just let people decide on their own.
So there you have it, guys. There is Michael Kong's take, and this was filmed exactly on the few days that Luna was crashing. So this was this was filmed on May the 10th, as the debacle was unfolding in front of our eyes, and it's very interesting to get Michael Kong's take. I mean, the trouble is right now, I would probably say this is a bit of a PR challenge, because obviously it's good news from a fundamental perspective that this is being built out, that they're working on the FUSD. I think there's a bit of a marketing miss here, because it's like you've not read the room. The room right now, nobody wants to be talking about stablecoins. Right? It doesn't take a genius or a marketing department to say, we do not want to be talking about a stablecoin right now. We spoke about this last week. Any coin with a stablecoin as part of their ecosystem last week had this contagion effect where they were getting decimated as Luna was falling. So it probably isn't the best PR or marketing move for Fantom to come out and say, oh, we are finalizing the FUSD liquidations, right? And that's one of the reasons we're probably seeing Fantom fall more than some of the other coins today. 13%, 14% versus some 7% on Luna. Atom down 9%. I mean, it's a bad market anyway, but it's falling an extra couple of percent just because of that. And obviously, yes, it's a small project, but if you're looking at Avalanche down 10%, Fantom down 13%, part of that is to do with some of these fears around the stable coins. And again, just a bit of a PR misread of the room to be coming out with that. Now, longer term, I don't think it's going to be an issue, right? Everybody's going to get back to stable coins. The crypto space needs stable coins. Just because this has happened with Luna doesn't mean people aren't using USDC, doesn't mean people aren't using Tether, doesn't mean people aren't going to use FUSD, they're not using DAI. They're using these things, right? Because it's a necessary evil. Now, over time, people are going to try to solve this challenge with many different solutions. But the reality is, for us as investors, we need to use stablecoins, use them with your risk hat on. Never put your whole net worth in stable coins like some people did in Luna to get 20% yields on Anchor. Just be sensible, right? Spread it around a few different stable coins. Make sure you're only in them for as long as you need to be in them. These are the kind of tips we give to our course member lives. We're talking about it the other day. And just be smart with it, right? And same with wrapped assets. Why should you sit in wrapped assets for a long period? What if there's a hack on the network? Only be in wrapped assets when you need to be, and quickly know where you're trying to go, what are you trying to do, and get back to the original assets. At the end of the day, if you don't have the keys for your assets, you don't have those keys, these wrapped mechanisms, these stable coins, they're all just a method of transit. Get to your destination and then keep it moving from there. Fear and greed notched up a little bit today, sitting at 14, which is quite interesting. I guess that makes sense as we were running towards 31. If we start heading back down towards 24, things could start to get interesting again. And that's the level I'm looking out for. At the moment, we cannot say that the bulls have taken control. I mean, it's a bit premature for that. If we can break out and start heading towards 37,000 from this pattern, from this neckline, then great. But at the moment, the bears are in control. You can argue this is still a consolidation. It's still a bear flag before we get a bigger move, bigger impulse wave to 24. So I'm not chasing any candles here. I'm not nibble buying at these higher prices. I want to see, do we get that lower lows? Do we lose the lower low at 20, at the lower, what was the level there? Let's get that exact level for everybody here. so we're not guessing. We got that low there sitting at 28,700, and then more importantly, the 26,300 level from this pivot point, because if we break those, then we could be heading to 24. So that's what I got my eye out on for. If we do head to some of those levels, we're going to get some really good entry points on some of our favorite coins. You will see altcoins fall a little bit more. Now remember, tomorrow we get Jerome Powell speaking. Jerome Powell is speaking tomorrow at 6 p.m. Eastern time. So let's just check that. And you can see that on here. There we go. Fed Chair Jerome Powell's speech. So let's listen out for that. It has a huge market impact. If you remember the last time he spoke, it did move the market. So it's definitely something we need to listen to. Will he flip-flop? Will he come out hawkish? Will he come out dovish? It's going to move the markets tomorrow. And that could be a good catalyst for us to really start breaking through 31,000 here on Bitcoin, because that's ultimately what we need. We need to get past 31, work towards 32,600, this support line here, and then we can start working our way out of this difficult situation. But right now, like we've been saying with all course member lives, this is a time for you to get your portfolio right. Get your portfolio right, get the allocations right. If you haven't been thinking from a portfolio perspective, if you were playing around over the last couple of months in crazy Bitcoin, take what happened with Luna as a reality check. Today, get focused on your portfolio. We were literally talking to course members on yesterday's live stream, and a couple of them were so thankful that they joined the live stream about a month before the Luna troubles happened. And in the live streams, we critiqued their portfolio. We said, you're too allocated in certain coins. They went ahead, they diversified their portfolio, and that kept them out of trouble in the recent downturn we just saw. And that's really important. You don't need to join the course member live stream. You can do this yourself. Take some post-it notes, draw your portfolio allocations, and start working towards that. You shouldn't just be hugely allocated in any given one coin. No one single project should be able to wipe you out. And if it can, you really need to take a deep look in the mirror, because it's not the project's fault if you get wiped out. That's your fault. You're in control of your portfolio allocations from here on in. Take the time to educate yourself. Take the time to learn. If you want to be in crypto for the long run, start educating yourself today so you have that education with you for the next number of bull runs, right? Get the education now in this crypto winter, in this bear market. So when prices are getting to all-time high, you're enjoying it with a good portfolio, with good knowledge, good understanding of your favorite projects, and you're good to go. Hope you guys enjoyed this video. As always, don't forget to smash the like button and subscribe. If you like my perspective, check out the course member live stream, ijaz.uk/member, and I'll see you in the next one.